One of the questions I get asked so much is, how do I choose the brokerage platform that is appropriate for my needs? There are so many brokers out there. How do I know which is the right one for me? So in this brief video, I just want to go through some of the things you ought to consider before you make that choice. Now, I've loads of experience in this. I've spent decades investing my own money, and I was also 30 years working as an investment banker or asset manager. So I want to go through with you basically the four main things that you're going to be looking at before you make this decision. Now, the most obvious one and the first one is going to be cost, and we'll talk about that a bit more in a moment. The next one is going to be, what are you looking for? How exactly are you planning to trade? What is going to comprise your portfolio? Then we'll talk a bit about customer services. And then finally, the simplest question of all to answer, which is, where do you reside? So let's look into these four issues in greater detail. First, and most obviously, is going to be that the brokerage platforms often charge you different levels of cost. Now, broadly speaking, there are two types of costs they like to charge you. Most of them will have an annual fee, which will be a percentage of the funds you have invested with them. And that annual fee does vary quite a lot from one brokerage platform to another. Now, the second way of charging you is by the trade. This means every time you trade, you have to pay. And this is really important because you're going to need to consider how much you think you're going to trade. If you hardly ever trade, let's say once or twice a year, then this fee is not going to bother you a great deal. But if you're a day trader, or you have lots of positions in your portfolio and therefore there's always something you're doing, these trading costs can mount up. And bear in mind, this certainly applies to anyone who's investing in UK stocks. You're also going to have to pay stamp duty to the government as well. And therefore, the cost of trading on a day-by-day basis with some platforms can be rather higher than it's with others. So do take that into account. There's also a hidden cost as well, which is not necessarily made very clear to you. If you're buying a security in a foreign currency, or you're selling for that matter, security in a foreign currency, there may be a FX charge levied on you as well. So for example, if you are a US-based investor, you've invested in dollars, and you decide you want to buy some stocks in France, those stocks in France will probably be denominated in euro, and there is an FX charge for you to buy the euro and sell the dollars, and then buy the stock afterwards. Similarly, if you choose to sell that stock, you sell the stock first, and then there'll be an FX charge to translate the proceeds back from euro into dollars again. Now, those FX charges can be quite steep, and there are some workarounds, but it's worthwhile remembering that if your brokerage account is charging you big FX charges and you are prone to invest overseas, then this is going to be an important issue for you. Now, here's the two workarounds you might consider, one of which, of course, is to buy ETFs. Because when you're buying ETFs, you're buying a basket of stocks, and you can often buy that basket of stocks denominated in your own home currency. So again, if you're a US investor, you're buying an ETF, which is stocks in the French market, you may be able to buy that ETF denominated in dollars, and that'll take out some of the FX costs. So definitely worthwhile considering that workaround. And of course, there is another one, which is to buy managed funds. But managed funds themselves, you're paying for the manager to choose which stocks to buy, and that, of course, is going to incur a cost for you too. Now, different brokerage accounts will charge you different amounts for holding managed funds compared to either stocks or ETFs. So what you'll want to look at is whether there's a levy which is quite hefty if you're buying these managed funds. You'll need to decide, therefore, whether you think you're going to be an investor primarily in equity or fixed income, where you'll be paying one levy on the assets you own, whether you're going to be buying managed funds, or whether you're going to be buying ETFs. In each case, the cost of trading can be quite different. So already we can see that the cost of running a brokerage portfolio depends very much upon what you've put in it, whether it's going to be managed funds, whether it's going to be ETFs, or whether it's going to be single name stocks, fixed income perhaps. You'll need to look at the small print to find out how much they charge you and make an estimate where the best brokerage account for you is going to be. But there are other things that matter as well, and it's not just cost. So here's an example. For myself, I like to trade international stocks. I don't just trade in the US, I don't just trade in the UK. I own stocks in Japan, India, in various places in the world. That's just a personal preference for me. If you think you are going to be actively buying stocks outside of your home country, you want to find out whether you have access to the stock markets in different locations or not. Some brokerage providers will give you a wide range of international stocks that you can trade. Others, the range is much more restricted. For some of those as well, they might give you a wide range, but they will put additional fees on you for buying or for holding international stocks. You need to think about this very, very carefully. Because if you're a US investor who's decided your main focus is on the US economy and you're not buying stuff outside the US, your choice of platform could be very different from someone who wants to look at international stocks. Now, it's easy to test this because if you can get a demo account, then you can try and actually paper trade with different stocks and you'll see whether the platform will let you buy them or not. Often they'll tell you on their website whether you have access to these markets, or if none of that's available, then I would ring them up and ask them directly. Remember as well that there are two workarounds here. One of them we've already discussed, that if you don't, for example, have access to the Japanese stock market, you can still buy ETFs in Japan if they are denominated, for example, in dollars, and you might want to decide that's a better route for you than choosing individual Japanese names. There is another workaround, is that many of the international stocks trade as ADRs. An ADR is an American depository receipt, and that will trade on the US stock market. So, for example, some Japanese stocks you may want to buy, you can't have access to the Tokyo stock market, but the same stock will trade as an ADR in the US, and therefore you can buy it in the US instead. So in my mind, one of the things you really want to check out very thoroughly is, do you have access to the stock markets you want to buy into? And if you don't have access, is there a range of ETFs you can purchase? And they all have different ranges of ETFs, of course. Or do you have access to the ADR market in the US? So I certainly think before you choose your brokerage account, you need to figure out what is it you want to put in your portfolio. Now, one thing that goes even further than this is you may not just be buying equity, you might be buying fixed income. And if you're buying fixed income, is this going to be restricted to the US Treasury market, the UK gilt market, or are you going to be buying French OATs, Japanese government bonds, JGBs? Will you be going further into the international markets, maybe even into emerging markets? Now, of course, it's up to you to decide whether you have the competence to trade these instruments and whether you've got the skills to do so. But nevertheless, think about this carefully in advance. Most institutional investors will hold a proportion of fixed income amongst their assets, and you as an individual might think that's a sensible thing to do as well. If you do think it's sensible, figure out whether you can get access to the fixed income markets that you want to buy as well. And if you can't get direct access, so for example, you can't buy US Treasuries or you can't buy all the UK gilts that you want, is it possible to gain access through an ETF instead? So look carefully at the range of products that each brokerage platform offers, and you'll need to make a decision as to whether the range that you want to trade corresponds to the range that is on offer. If it doesn't, either choose another brokerage platform, or in an extreme case, you might decide you might have to have more than one brokerage platform in order to meet your needs. For myself, I do run more than one. I operate 2 or 3, just because my needs are relatively wide. Let's now take a look at the different services that different platforms provide. Now, for me, one of the key things that I like to focus upon is what actually happens when you trade. What does the interface look like? Now, some brokerage platforms are very, very simple. And if you're an unsophisticated investor and you just want to simply buy or sell at market, choosing one of those platforms might be the right thing for you. Other platforms have very complex workstations that you can get onto, and it tells you a huge amount of information about the markets trading that day. And you can put on different types of orders, including limit orders, and you can also see what other orders might exist in the market. These will be much more complex and much more challenging to use. You will need to decide what type of trader you are. If you really want to get into it and you want to be very sophisticated, then go for the more sophisticated platform. It'll take you a lot longer to learn how to use it, but I think you'll find the payback is worthwhile. For many people, however, who either trade occasionally or don't want to get involved in the complexity of this, look at a platform and maybe go for one which is less sophisticated. So that's the first element of customer service. What's it like when you actually trade? The second element that I think is really important to me is, will they allow me to hold foreign currency in my brokerage account? Now, a bit earlier, we discussed whether you're going to trade international stocks or not. I do quite actively, and one of the things I want to avoid wherever I can is those FX charges. So an account that lets me hold euro or Japanese yen or sterling or dollars in my account is very, very helpful, because it means the part of my portfolio which is denominated in dollars always stays in dollars, and I use that part of the portfolio to buy US equity. There's a part of my portfolio which is denominated in euros, which I use for European equity. This means I don't need to get involved in selling back every single equity into sterling, in other words, incurring an FX charge every time I transact. Or worse still, whenever a dividend is paid, for example in euro, having to pay the FX charge as that's translated back into sterling or dollars. So a key question you might want to ask is, can I hold foreign currency in my brokerage account? If the answer is yes, you can manage the different currencies separately. And if you're a sophisticated investor buying international equity in more than one currency, that's what you may need. If, on the other hand, you just want something simple, let's say you're a sterling investor, you mainly invest in the UK, and where you invest outside the UK, you just want to hold sterling, you don't want to get involved in the complexities of worrying about other currencies, then by all means go for one where all currency is always translated back into sterling and there's no foreign currency there. I do say quite a bit more about this in my paid courses online, so if you want to know more about it, ask me some questions in the comments and I'll point you in the right direction. But I think in terms of customer service, that's really important. Just one caveat to add, of course, to the UK investors out there. If you're looking for a brokerage account to hold an ISA, these are only available to UK tax residents. Bear in mind that that ISA will not let you hold foreign currency anyway. You can only hold sterling in an ISA account. So that discussion, if you're based in the UK, is relevant to your non-ISA holdings, those which sit elsewhere in a brokerage platform. Again, more details in my paid courses. Lastly, I think you may want to get a sense of how good is their customer services. If, for example, you can't log on, you have questions, you want to know what the user interface is like. Call up their customer services, give them a trial run. If you're hanging on for an hour and you're trying to do that trade and you're getting really stressed, that's not great. You might not like that. If, on the other hand, they answer the phone real quick, then that's good. You'll have to judge whether good quality customer service in terms of the telephone answering service really matters to you. For me, when I want to trade, I usually really want to trade at that time. And if things aren't working out, I do want to get a quick response. And also I want to get a quick response based upon the time zone of the equity I'm trading. In other words, if I'm up late at night trading Japanese equity, I want to know there's someone who speaks English at that time of night available in Tokyo to answer my questions. But then you might not be trading Japanese equity, you might just be trading in the US. You'll have to take a view based upon your own needs. The last question you have to answer, and this is the most straightforward, is where do you reside? If you reside in a particular jurisdiction, you'll need to make sure that the brokerage platform that you're going to use is licensed to operate in your jurisdiction. You don't need to worry about this too much because normally they will ask you which country are you resident of, and if they're licensed to work with you, they'll then accept you, and if they're not licensed to work with you, then they'll tell you they can't accept you. The reason why you need to think about this is if you're based, for example, in the UK, you see a great brokerage platform in the US, you think it's wonderful, but it's not available to you. Don't waste your time trying to understand it more. Just move on. You can only access those platforms which are licensed to operate in the UK. Similarly, if you're in the US, there are very specific restrictions around US persons, and therefore you'll need to make sure the platform is licensed to operate for people who are US persons. But that should always be relatively straightforward. So those are the 4 things which I would certainly consider before opening a brokerage account. Really figure out what it is you want to trade and how you want to trade before you open the account. And if necessary, you may need to open more than one account, but bear in mind that's going to come at a higher cost. Personally, I always advise people, do hammer down on those costs. Don't open 10 different brokerage accounts. Leave them open when you only need 2 or 3, because you're just losing money every day, and it makes more sense to really look at how much you're paying away just for the privilege of having that portfolio, because you don't want to waste your hard-earned gains. I do hope this video has been useful to you. If it has, please do click like. Please click subscribe, as it helps other people to find the channel and appreciate these videos as well. If you want more details of our paid videos, you can see them on our website. And of course, feel free, if you have any questions, put them on the comment section below. Thank you for watching.